All right, well, we have largely pushed through the profit reporting period. Earnings, in many cases, were better than expected and kept investors in a bullish mood. Stocks in Canada and the United States still hovering around all-time highs. But what comes next, especially with a lot of people wondering about where the economy might be headed? Let's bring in Gordon Reid. He's President and CEO of Goodreid Investment Counsel and one of our regular guests. Gordon, it's nice to see you.
Nice to see you, John.
So this has been, not a very dramatic word, an interesting year. I was just looking at the S&P 500, actually, which is up in the neighborhood of 10%. What we don't talk as much about is that 7 out of the 11 subgroups in that index are actually trailing the broader market. So there is sort of a haves and have-nots.
Sure.
How important is that to you?
Well, it's something to note, and it's not an unusual situation, especially as bull markets mature. So what we've seen is that communication services, the big, large cap, mega cap companies, growth companies, AI-inspired companies, have really led the market. Names like Amazon and Microsoft and Meta, and so on. So we've definitely seen that, but it was a very, very good earnings season, John. We have over 90% of the results in, and 81% of the companies reported an earnings surprise to the tune of 8.4% above analyst expectations. So that's very, very strong. What we're met with, of course, is valuations that are reacting to that. So they're a little bit stretched. Right now, our forward PE on the S&P 500 is a little over 22 times. The historical 5-year average is 19.9. The 10-year average is 18.5 times. So a little bit stretched. And I think that what we're talking to our clients about is the fact that we should anticipate normality, and normality includes volatility. We didn't see it in 23 and 24, and I think a lot of clients are fairly sanguine about the fact that we've come off the April lows so nicely, and things are just going beautifully. Well, you know, corrections happen, and we shouldn't be surprised if one happens, but that won't interrupt, we think, what is a very good market on a firm foundation.
Okay, so when you use the word correction, like the classic Wall Street or Bay Street definition is 10%. So is it correct that it wouldn't shock you if between now and some point in the fall that you could be giving back some of the gains? And it sounds like even with that, especially with some of those technology companies that have shown the most force, it would seem, in the market, that you'd still be committing capital or sticking with some of those stocks. Is that what you're saying?
Yes. We're long-term investors. We buy good quality companies and actually use corrections as an opportunity to add more cheaply. So we continue to like the fundamentals of corporate America, and the pricing might be a little bit stretched leading into the potential for a correction, but one shouldn't, in our opinion, try to time that or trade that. That tends to be a losing strategy over time. Buy good companies and keep them long term.
So with the economy itself, I know, we're sort of leaning more into a conversation around the U.S. economy, and then we'll hear from the U.S. Fed chair at the end of this week.
Yes, Jackson Hole.
I was talking to Bloomberg's Mike McKee, who's on the ground in Wyoming, and he said, if people are expecting a clear message of rate cuts coming, you might want to think twice about that, just because we've seen a couple of sticky inflationary, indicators that might make the Fed's job complicated. Heck, arguably it's made the Bank of Canada's job complicated. So how do you look at the sort of the economic backdrop against what you just told us about stock valuations and sort of the ebbs and flows of the market?
Yeah, well, there's no question that we're seeing some cracks in the economy. We've seen some labor statistics that are a little bit troubling. You mentioned that inflation is sticky. It's staying higher, and it's staying higher on a troubling aspect, and that is on the services side, which is tougher to bring down than sort of the goods side. So those are certainly issues to watch, but we think that they're largely on the back of policy uncertainty. So when you look at the consumer, for example, consumer sentiment numbers have been quite weak, yet retail sales have held up. And when you try to square those two, I think the answer is that underneath the retail sales is a fairly weak group of the lower end demographic, and the stronger, the more wealthy are holding up retail sales. So we have to take that into account. We've got some big box store results coming this week in Home Depot, Lowe's, Walmart, Target also. Those will be very interesting to watch. On your point about what we might hear out of the Fed, you know, if I were the Fed chairman, I certainly wouldn't provide any certainty, given the fact that before the next Fed meeting, we've got some economic prints happening. So we're going to see another consumer number. We're going to see another inflation number, another labor number. So I would hold my cards pretty close to my vest if I were Mr. Powell. But the markets are anticipating a cut right now built in to the futures market as an 85% likelihood we'll have a September cut.
Yeah. And to your point about retail this week, so we'll get Walmart results on Thursday, Home Depot's tomorrow. Right. So we'll see what those companies are saying. But based on everything you've said, you still like a lot of sort of the mighty tech names. You mentioned Amazon earlier, just as an example. Sounds like you'd be cautious of some companies that cater to the retail crowd.
Correct.
And then what about other sort of sector positioning right now are you thinking about?
Well, we very much like the financials. They're priced very fairly, so the market...
In this U.S. financials?
Yes.
Okay.
Yeah, well, we like Canadian financials as well, but okay. I have a partner who handles that.
Yeah, you're the U.S. guy.
Yes. But we very much like the financials. They're priced historically more in line with averages as opposed to the complete S&P 500, which is trading at a premium. And we're moving into a period that should be favorable to financials. Interest rates on the short end are poised to fall. Inflation is sticky, which should keep the long end higher, which creates a steeper yield curve, which is how banks make money with borrowing short and lending long. So we like that. We also like the capital markets business. There's a huge pent-up demand for deals, and we've already seen quite a few deals, even within our small cap portfolio, which of 34 names, John, we've seen, I think, 4 takeovers just in the year 2025.
We're pretty much out of time, but can you just explain that dynamic that on the one hand, we can be looking at what feels like a bit of a cloudier economic outlook, but there are growing expectations for, you know, deal activity on Bay Street and Wall Street. What's that dynamic?
It's about the confidence in the boardroom, and I think there's been a pent-up demand because there were policy restrictions under the Biden
trade
administration.
thing that was holding everybody back.
A little bit, and I think that there are clearing skies in terms of policy uncertainties. The tariff issue is being digested. I won't say that the whole thing is over, but it's being digested. And I think that, you know, a very interesting statistic quickly is that the term recession in the conference calls of the S&P 500 fell 87% in the second quarter compared to the first quarter. Historically, the term recession has been used, I think it's 91 times out of the 500 companies over the last 5 years, 65 times over the last 10 years. In Q2 of 2025, it was used 16 times. So the conclusion is that corporate managers are not anticipating a recession. They see perhaps unsettled conditions, but still a growth environment.
Yeah, words give us a window into the minds of the corporate leaders. Gord, thanks very much. Appreciate it as always.
Thank you, John.
Gord Reid joining us of Goodreid Investment Counsel.